Hi, this is Paul from experttrading.com, and this is a Forex trading tutorial using our range breakout indicator and the manager indicator on the NinjaTrader platform. It's also available for MotiveWave and TradingView. So we have defined ranges. So New York Stock Exchange Open, New York Gold, the European Gold Pit Open, London Gold, even the ASX when we look at Australian dollar or anything with the Japanese yen. So let's get straight into it and talk about these trades. So US dollar CAD 10-minute time frame, we get the European Gold Pit Opens. That's when the Forex traders really start to get moving in Europe. The European Gold Pit Open, we get a very narrow range. It is red. The label's red, so we're only looking for the short when it breaks out of that opening range, and there it goes short all the way down into the London opening range. Again, that's printed red. We're only looking for a short breakout here, and again it breaks out and goes down. Nice little move there. When we're talking about US dollar CAD, this is a Forex pair that is probably more prominent volatile during those US sessions. So when you're looking at these European session opens, you're just looking for a certain pip move and then getting out. Now when we start to come into the New York Open, obviously the US dollar and the CAD, there's a lot more data coming in for those particular currencies, so there's going to be more volatility, more movement. So then we would switch to the manager to manage these trades. So we get the New York Gold Pit Open here. We reject those highs, but the tag is green. The tag is green. The range is green. So only looking for longs breaking out the high of this opening range. And there we go into the New York Stock Exchange Open. At this stage, the manager, the ribbon on the manager is green, so we're staying in this trade. We get the New York Stock Exchange Open. Again, it's labeled green. The bias is green. You know, everything is green. We're only looking for longs. Goes long. Again, we get that volatility that comes down. Test that New York Gold Pit opening range, and then goes. All this time, the ribbon for the manager is still green, and then we get this huge move all the way up here, and we continue all the way to the close on Friday. So again, the manager remains green. Even on this pullback, we don't panic because we've got the blue dots underneath. This means lower than average volume. When this is a pullback against that main trend. When we had these big moves, we had the cyan dots up above, part of that manager. That gives us that real big momentum, and then we get these blue dots on the pullback, which means when they're underneath that it's lower than average volume. So it's just a normal pullback. There's nothing to panic about, and then we start to move back up again. So great looking trade. That's going to go GBPUSD this time. So different, yeah. So we really need to consider those European Opens because of the British pound, but also then the US dollar because we're going to look at those US Opens as well. So we get a European Open, it's green, we're only looking for longs, and it goes long. We get the London Pit Open, even though it's a red candle, we get a green tag and a green opening range, we go for the long. Again, these London Opens, we're only looking for those quick moves and then getting out. Even at that point there, you see the managers telling you to get out when the ribbon turns red at this stage. We then will go to the New York Gold Pit Open here. This time it's labeled red. The range is red. We're only looking for the shorts. Short breakout, away we go. We go into the New York Stock Exchange Open, again labeled red. The range is red. Look to add to that trade when it breaks down below. Manage the trade. The manager ribbon remains red all the way down to this point here, and that's where we take our profits. Australian dollar, US dollar, great for trading this. So again, remember we're looking at that the Australian Stock Exchange Open here. around about 6 p.m. EST. So we get that open, We get the opening range. We're only looking for short trades because it's labeled red. There was no short trade. It came back down through. We can then trade that short coming down here, and then we come back through long coming out this range here. The bias turns green the candle before on the range. Let's just zoom in on this a little bit here, talk about this in a little bit more detail. So we move up, we come down, the bias turns red, we short that trade. We get out at this point here if we're conservative, but we take this long. The bias for the range is green, and then it breaks out to the upside and it just goes and goes and goes. The manager ribbon remains green all the way into the European gold pit open, which is labeled green. The range is green, we're only looking for long, so we can add to that trade. Or if we were asleep and we're just trading this open, we look for that long coming out of that European gold pit open. Then we've got the London open, we go long again, it's labeled green and it's the range is green, so we go for those long trades. It pulls back. Again, with these European opens, we're just looking for a certain pip move, and then we get out. Then we pull back down, we pull back down again, and then we're coming into the New York gold pit open here. Larger range, more volatility with that US dollar part, half of that Forex pair. It's labeled yellow. Okay, so we don't trade that. We then get the New York Stock Exchange open. It's labeled red, and we are red on the bias for the opening range. We trade short. We're only looking for the shorts. We short this coming out of that range here, and we go down, down, down until the close. The ribbon still remains just red at this point here, and then closes down near the lows. Again, look at this pullback here. This is telling you not to panic. Lower than average volume pullback. These blue dots underneath, part of that manager, and then comes back down again. And then European, Euro-Japanese yen. Again, we'd look at that ASX, part of that Europe wide. So we've got the ASX open, we're only looking for the short. We get a nice short scalp down here. Comes back down, we get another short coming, breaking out of that range because the range is still red. We're coming back up to that range. The range turns green on this candle. We get the breakout to the upside, probably just above this wick here, and then it goes hell for leather all the way into the European gold open. The manager from that original trade is still green, so you would stay in this original trade. We get the London open. Now that is printed yellow, but look at the price action, comes back out through here. The range for the European gold pit open turns green. You take that long scalp all the way up there. We come back through. Now the bias turns red for the London open. On this candle here, we're looking for a short breakout. Go below this pivot here. This is the short. Pulls back, lower than average volume. Manager says stay in. The ribbon remains red all the way down into that New York gold pit open. The New York gold pit open, the range is red, the label's red. Look for the shorts. Again, down, 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 down. New York Stock Exchange open, labeled red. Look for the short. The manager's saying stay in all the way down to the close. So again, it's combining that range breakout, and they can be used. You can move these around a little bit for data points as well. You can trade the Forex on major data points as well. You can label them data, change the times, but it will work out that bias for that opening range, and you can trade it right at that opening range. Or again, in the future, like we looked here, when it came back through that European gold pit open, the range was green. So we go the long, we take the long. We come back through the London open, the range is red. We go short. So there's lots of opportunities here. And I've gone US dollar CAD, GBP US dollar, Australian US dollar, European Japanese yen. So there's lots of opportunities. This is not a one-hit wonder. This is a very, very sensible strategy. It defines the range. It also gives you continually gives you the bias for that opening range, so you can trade it right at that opening range breakout, but then continual trading opportunities during the day. And again, you should always be looking at those ASXs, the Euro and the London Opens and those New York Opens. There are plenty of trading opportunities using this opening range trade, the range breakout trading indicator from XBRAT, and also then the manager to stay in the trade, not panic, and maximize those profits. Hopefully that helps. Speak to you all really soon.